Market Domination. I'm Josh Lipton. It's a busy day on Wall Street. We're 30 minutes away from the closing bell. Stocks surging here. Let's get to Jared Blickery with a look at the action. Jared.
We are looking at a bullish day today. The majors plus the Russell 2000 having the best day in a week. And also, by the way, Dow up over 500 points here. NASDAQ 100 and the S&P 500. And you're seeing a lot of bullish chart action right here. Best 2 days in about 4 months. So really flying high here. And here's the Russell 2000 small caps really leading over and above the majors, up almost 2%. And let's get a quick check of the bond market as well. 10-year T-note yield back down below 4%, but that's just a 2 basis point drop. 30-year down to 4.58%. That's down 3 basis points. And I want to show you real quickly the VIX, and I'm going to show you the 10-day. We've had 2 scares over the last week or so, and now we are seeing the VIX right back under 20. And so it's not quite back to where it was before the China tariff scare, but it's getting pretty close there, and that is pretty impressive. Also want to show you what's happening in the sector action. And today we are seeing the leader as industrials taking that pole position. That's up 1 1/3%, followed by financials, tech, communication services, all of those outperforming, and then including materials, all of those, plus healthcare, up more than 1%. Staples and utilities just barely negative. Those are 2 traditionally defensive sectors. And so looking at the NASDAQ 100, we have not only software, but also chip stock doing pretty well. A couple of red spots. You'll see NVIDIA and Broadcom down, but not even 0.5% there. And just a quick look inside, here's semiconductors. Aside from those 2, you're seeing pretty bullish action here. Intel up 3, ARM up 3, KLA, that's up almost over 4. And as I said, software doing pretty well too. Oracle down 5%, that'll generate some headlines, but Salesforce up 4.5 and Shopify up 4 as well. Also want to show you some of the smaller players. Inside disruption, aside from Tesla, we're seeing some of the innovators doing pretty well here. And I just want to show you that China, an uncorrelated asset group, for the most part, that's doing pretty well as well. Alibaba up 4%, JD up 2%, Pinduoduo up 2 3/4. And I will finish with the Dow Industrials and then the Dow Transports. So here are the Dow Industrials. You can see Walmart, that defensive trade, arguably down about 1%. Home Depot off 2/3. McDonald's just barely negative, but for the most part, a pretty bullish looking group there. Same for the transports, the stuff that ships the stuff. Uber, the biggest one, up 1 2/3. Plus the airlines doing pretty well. United up 3 and Delta up 4%. Back to you, Josh.
All right. Thank you, Jared. Well, for more on the latest between President Donald Trump and Australia's Prime Minister inking a deal on the framework of the critical minerals, this comes ahead of a highly anticipated meeting between Trump and China's President Xi Jinping. For more on the latest in D.C., let's get to Yahoo Finance's Ben Werschel. Ben, so this framework of a deal, Ben, with Australia, walk us through it. What do we need to know?
For sure, yeah. So this is a deal between the U.S. and Australia that does have the potential to be significant eventually in de-risking the U.S. and China on these critical rare earth minerals. But crucially, we don't know the sort of full effects of what it could be or how long it would take. The centerpiece here is a promise of $1 billion in new government financing for rare earth projects in both, mostly in Australia, but even processing in the United States. That's going to be lined up over the next 6 months, and it would open what the Australian Prime Minister called an $8.5 billion pipeline of these critical minerals that are in everything from jet fighters to electronics to electric vehicles. But beyond that, it's a relatively limited agreement. This is the entirety of it. It's about 3 pages long, and it's a lot of kind of promise language in there. One that jumped out to me, there's talk of quote, intensifying their cooperative efforts around this extraction. There's no hard numbers here, in other words, of what they're trying to get to. They're trying to establish a new U.S.-Australia critical minerals group, supply risk group, but what that group does remains to be a little bit unclear. The overall context here is that China has clearly built a real stranglehold on this. The estimate you see most often is that they produce 90% of the world's processed critical minerals. This is a bucket of different minerals. And what we've seen in the last few weeks is that they are really willing to use it as leverage in the form of new export controls that they're proposing to kind of control how much they dole out to the rest of the world because they control so much of this. A Raymond James analysis noted this week that this move from China has spurred a lot of actions like this Australia deal from the U.S. But in the best case scenario here, the U.S. is years away from any sort of self-sufficiency.
And all this coming, of course, Ben, is, the context here, we're all waiting now for the Trump-Xi meeting, correct?
Yes, exactly. So President Trump and Chinese President Xi Jinping are set to meet in South Korea in about a week's time. So this is clearly aimed at China. And I think what we should expect is a lot more of the same, not just with Australia, but with a range of China's neighbors. Trump even likened it today to a little tour he's about to go on. He has an itinerary for an Asia trip that includes a stop in Malaysia. The focus there is Southeast Asian nations. It's a group of about 10 Southeast Asian nations that are trying to be an economic counterbalance to China. Then there's a stop in Tokyo, and then there's a stop in South Korea for another economic summit. That's where President Trump and President Xi are going to meet. But President Trump was very clear to remind today there's a lot of other meetings on the docket there. How much he can kind of increase his leverage before this big meeting with Xi Jinping remains to be seen, but there's clearly a kind of coordinated effort here to set all this up as they sort of get ready to tackle a range of these issues. The Chinese are clearly have a pain point here on rare earth minerals. Trump says he has a pain point on tariffs. Semiconductors are another big issue. Soybeans are another big issue. All these issues on the table with rare earths clearly top of mind going into this meeting that we're going to see a lot of jostling in the days ahead.
All right, Ben. Thank you. Appreciate it.
Sure thing.
Well, investors facing a laundry list of worries while also looking out to key earnings on deck this week. For more on the market action, let's get now to Eric Diton, the Wealth Alliance President and Managing Director, and José Torres, Interactive Brokers Senior Economist. Guys, welcome to you both. Eric, I'll start with you. Start with earnings. Big names on deck this week, including Tesla. Bloomberg noting here about 85% of companies in the SPX have beaten profit estimates so far. What do you make, Eric, so far of what you've seen and heard during this earnings season? Do you think this earnings season is it the next catalyst to move this stock market higher, Eric?
Yeah, the old saying, it's the earnings stupid, right? And here we are with 3 quarters in a row of double-digit earnings. The economy just seems to gain momentum. You've just got a huge day today from Apple, right? Apple's been like a thorn in the side of the market for a long time. iPhone 17 sales looking great. The bank earnings that came out so far, really strong across the board. So you've got to be really bullish coming into this earnings season, and then just tack on an accommodative Fed and the CapEx coming out of the Mag 7 of literally over $500 billion, things we've never seen before. It's hard to make a bearish case here.
All right, Jose, I want to bring you in here as well. I want to get your take on the earnings season through your lens as an economist. Now, you read through these earnings reports, you're listening to these CEOs and CFOs. What have been the takeaways for you so far? What is, in terms of what it meant for the U.S. economy, the U.S. consumer?
Yeah, generally speaking, earnings have been great. There have been some soft patches, however, when you consider those firms that cater more to the lower and the middle income. So for example, the auto delinquencies that we've been hearing about, the regional bank issues, those financial institutions that have more exposure to the lower end households, they are in more trouble. As far as the markets, October from a seasonal perspective, it's pretty down. It's a mixed month. It's not one of the best months. But today, Josh, what we saw in the morning, Wall Street wants to make October positive. And like the former guest was saying, going into November and December, when you're looking at a rate cut this month and a rate cut in December, prospects are really bullish. When you look at what risks we saw last week, we were concerned about last week, we were worried about US and China. That looks like it's simmering down. Last night, Chinese data came out really awful. Retail sales was bad, GDP deceleration, fixed investment. The first contraction since 2020, the pandemic year. So last night's data from China, I think, gave the US a little more leverage going into these negotiations, and raises the likelihood that we're gonna have less hostility on the trade front and more cooperation.
Eric mentioned the AI CapEx boom. Jason Furman made an interesting point here, Jose, noted Harvard economist. He said, without that an AI investment boom, Furman pointed out, U.S. GDP in the first half would have been basically, he says, at a near standstill. Is that accurate?
I don't think so. The second quarter got revised through the roof. I knew it was all about consumer spending. It really wasn't capital expenditures. Capital expenditures was a huge supporter, but consumer spending was really the main driver in the second quarter. The first quarter, of course, we got that modest negative. That was because of all the front loading on trade, right? But I don't agree with that at all. I think that consumer spending has been buoyant, albeit it has been carried by the wealthier groups that have benefited from robust capital markets. We heard from the earnings and the banks. Wealth management businesses are doing terrific. Trading is doing great. M&A deal flow is also has a lot of activity. So overall, I think we have a buoyant landscape. It's not just CapEx at all.
All right, so Eric, so buoyant landscape. Listen, to Jose's point, I'm just looking at the markets. I mean, green everywhere today, Eric. Bulls come on and they say, listen, earnings growth is healthy and the economy is resilient and the Fed is cutting. Having said that, do you think at these levels, Eric, we're pricing in a lot of that good news?
Sure. This is not a cheap market. This is an expensive market, and as we've talked about, a very concentrated market. The top 10 stocks now accounting for 40% of the market cap here. So, by the way, if you take out those top 10, the PE of the market becomes a lot more rational. And just an interesting point: when the market gets this concentrated, when we get over 30% in the top 10, the next 5 years, the 495 other bottom stocks outperform 95% of the time. The point being, don't just over-concentrate your portfolio into those top beautiful AI stocks that have carried the market. There's a decent chance that at some point here, leadership can and will change. But listen, markets get expensive and they can get more expensive. What's the catalyst? There has to be some kind of catalyst. With, as we've said, with all this CapEx, with this accommodative Fed, with the big beautiful bill and 100% depreciation in 1 year, it's hard to make a bearish case here.
Where is the opportunity, Eric? What do you tell clients?
We always stay diversified. We particularly like the fact that we're seeing emerging markets and international stocks, after really a decade of underperformance, really coming into outperformance this year. And that's great because we always like to rebalance. So we've been buying them as they've been underperforming, and we're really getting paid this year. Same thing with small cap. Even though I don't really like the Russell 2000 as an index, nearly half of the stocks are unprofitable, which is not great. But you've got the S&P 600, which is a higher quality index. The bottom line is smaller companies are more levered, and when you have that accommodative Fed, and we do think we're going to see 2 rate cuts this year, followed by more rate cuts next year, then those levered companies stand to benefit more. And as we've seen in the last 3-4 months, small cap has been outperforming large cap.
Jose, here's a question. Stocks are working today. You know what else is working? Gold, shining. Again, what message is the metal sending me as an investor?
Yeah, quick message. Central banks have essentially given up on their 2% targets. They're tolerating above target inflation rather. Look at the Bank of England. They've been cutting with inflation at 3.8%. We're cutting with inflation at 2.8, 2.9. This Friday is probably going to come in around 3%. Central banks are defending prosperity now, not as much the currency strength or the inflation mandates. And one other thing that Eric was saying earlier about the Russell 2000, I'd love to add, is that those vulnerable companies, they do benefit from rate cuts, but they also need a strong economy. So it's that dual force that's gonna come hitting. You have a growing economy alongside rate cuts, a really narrow path for that Russell 2000 to rally from here. It's near its record highs, but those two factors I think are going to help it. But gold, you have that's really it. Folks, there's too much liquidity in the system, Josh, after the pandemic, way too much from fiscal authorities as well as central banks. And then, there's real estate has high valuations, stocks have high valuations, treasuries have relatively high valuations if you compare them to inflation. So folks are just running into gold.
Running into the metal. Jose, Eric, great to see both you guys. Thank you.
Thank you.
Thanks so much.
Coming up on Market Domination, big moves in the crypto space. We've got a look at the winners on the other side of the break, plus Tesla earnings on deck. We've got everything you need to know ahead of Wednesday's report. Crypto climbing as Bitcoin rises back above 110,000. Here with a closer look is Yahoo Finance's Inez Ferre. Inez.
Josh, we are seeing that Bitcoin is up for a third session in a row. Remember that Bitcoin trades about 24/7, really. So Saturday, Sunday was up, and also today. And this is following a mini crash recently. We also saw, I'm going to pull up here a 4-day chart here so you can see on Friday it was down to around 104,000. And remember that Bitcoin was at north of 126,000 previously on October 6th. That was the all-time high. And if I just pull up to month-to-date chart, so you can see month-to-date, Bitcoin is relatively flat, and this is supposed to be a seasonally strong month for the cryptocurrency in general, and also for Bitcoin, of course. Look, there's certain catalysts that are sending it higher today, and also this is giving the bulls sort of some steam, thinking that perhaps we will see meaningful gains for the month of October. Strategy added more crypto Bitcoin to its balance sheet. I'm going to pull up the crypto stocks so you can see some of the big gainers today, including Robinhood, Coinbase, MicroStrategy or Strategy up 2%. You also have another catalyst, which is Japanese regulators are considering whether Japanese banks can hold Bitcoin and other cryptocurrencies. This is bullish for the crypto space in general. Also want to point out some other crypto-related stocks which are also soaring today. And these are crypto miners that have diversified into AI and high-performance computing. Okay, what does that mean? It means that they're repurposing their data centers and computer hardware that was used for mining, and they're instead supporting AI and computing workloads and tasks for AI. So this has been a very big revenue generator for them. So the top three stocks that you're seeing here, Bit Digital, you're also looking at Riot, Mara Holdings as well. Those are all soaring because they have done very well in their pivots to going into AI.
And Inez, I have to ask you about gold as well. I was just talking to another guest about this. Just continues to shine here, Inez.
Yeah, if we just pull up a chart of gold, you will see that gold is pretty much at its all-time high back again. I mean, we saw a dip for gold last Friday, but investors bought that dip. So we are seeing gold that's higher again today, silver that's higher again. You have to ask yourself, when are you going to see a correction in gold? I mean, you have had strategists that are talking about gold being overbought, that it's due for a correction. But look, central banks are big buyers. They hold about 17% of all the gold. They are not sellers.
Thank you, Inez. Appreciate it.
Thank you.
Tesla's third quarter earnings on Wednesday coming up, and while Wall Street is bracing for a few rocky quarters, investors are looking past the car business to what Elon Musk calls the company's AI era. This is all coming ahead of a critical shareholder meeting coming on November 6th. Musk facing a vote on a pay package worth up to $1 trillion and could make this the most consequential stretch of Musk's career yet. For more, we're bringing in Al Root. He is, of course, associate editor at Barron's. Al, always good to see you. So Tesla earnings on deck here, Al, with the stock up a cool 100% over the past 12 months. Now, I did see an earnings preview, Al, from the great Dan Ives over at Wedbush. Yep. Dan, of course, Tesla bull of Tesla bulls. Dan telling clients, Al, he said, after a brutal few quarters, we are finally starting to see stable demand trends for Tesla. I'm curious, Al, what you think EV sales could look like for Tesla in the quarters ahead in this post-EV tax credit world now.
Well, it's interesting you say that, Lee. I don't think we should say stabilization yet, right? I think that we had an incredible quarter in the third quarter. Tesla beat expectations, sold almost 500,000 cars, a record. But a lot of that was pulled forward because of the tax credit expiring at the end of September. We all used to get $7,500 off our Teslas. We don't anymore. And so I think it's just too early to say that. They launched the standard versions of the Model 3 and the Model Y, right? So, Musk in the second quarter call said, we're preparing for a couple of rough quarters. I still think we should be in that mode of preparing for rough quarters. I think the demand outlook for EVs in the US is EV sales in China are slowing down. Tesla's going to probably have its first decline year over year in China ever. So there's still some concerns on the car side. But Josh, the issue is, what do we care about cars anymore? It's all AI.
It's all AI. So let's go there. I mean, what do you think we hear about robotaxis, for example, Al?
So I think on the quarter, what you're looking for is expansion into other cities and then expansion in Austin, Texas, right? So again, Musk, who always calls himself an optimist, said he was hoping that Tesla robotaxis would be covering half the US population by the end of the year. We're in October. They still just operate in Austin with a safety driver in the passenger seat. A safety rider in the passenger seat, not officially driving. Now, the bulls will say, well, they've expanded the service area in Austin really, really quickly. The bears will say, wait a second, you don't even do this in 2 cities yet. So that's the balance. So whatever they say, and then, they're shipping new versions of their full self-driving software. It's at version 14 now. That rollout's being staged. It's supposed to be much better. I don't have that version in my car yet. I still have version 13 something. So we'll hear a lot about that, and it'll be all about how fast are you expanding, what's the revenue outlook, when would this start to impact things like automotive gross margins. That's sort of the color we'll look for on the call about robotaxis. In
that great robotaxi market there, Al, what would you say Tesla's advantages are as it competes with a Waymo?
I mean, there's really a couple. There's AI technical stuff, which is largely sort of over my head, but let's just assume that they both use AI computing to train their cars to drive. Tesla's non-deterministic and Waymo's deterministic, and I don't understand any of that. But what it really comes down to is Tesla has the ability to manufacture millions of cars a year. And they have a cheaper sensor suite and rely on optical cameras and their AI brain to do the driving. If they can come up with generalized autonomy with that system, they'll have a cost advantage over somebody like Waymo that's using LiDAR, laser-based radar, ultrasound, optical cameras, and its own AI brain to drive the cars. And it doesn't have a car company. It'll be buying cars. So the ability to scale quickly and the ability to have a cost advantage over a Waymo would be substantial. That's what Elon is betting on, right? I can do this cheaper. And what I would say is, we used to think about, self-driving, we'll all get there. Everybody will have a solution. Cruise is sort of disbanded, GM's Cruise. Self-driving turned out to be more expensive and more difficult, and we sort of have 2 companies that can do it. But for Elon, it's scale and cost that he thinks is going to lead Tesla to have the lion's share of this market.
I only have about a minute left, Al, but I got to ask you about this Musk pay package because some notable voices don't look like fans. I mean, I see Glass Lewis urges a no vote. That echoed a recommendation from ISS. Now, Tesla calling the Glass Lewis recommendation misguided here, but what do you make of it?
So people ask me, should Musk get the pay package? Nobody cares what I think. It's going to pass, right? They passed it. Shareholders have approved primarily stock-based compensation for Musk 3 times, awarding him hundreds of billions. This is about 425 million shares. They all vest if basically Musk sells 1 million robots and makes Tesla worth $9 trillion. So shareholders like this setup. Do I think it's too much? I will go on the record and say it's an egregious amount of money and probably unnecessary. But Musk wants it, and Musk is going to get it. So there'll be a lot of noise between now and November, but do not expect ISS, Glass Lewis, or anybody else to influence Tesla shareholders.
There you have it. Al, always great to see you, my friend. Thank you.
See you, Josh.
Well, we're just minutes away from the closing bell on Wall Street. Stick around for Market Domination Overtime after this. Closing bell on Wall Street, and now it's market domination overtime. We're giving you full coverage of all the moves, get you up to speed on the action from today's trade. Yahoo Finance's Jared Blickry joining us here to break it all down. Jared.
Thank you, Josh. Pretty bullish day to start the week, and we'll start with the Dow here, up 1% or roughly 500 points. NASDAQ Composite up 1.33%, and I gotta highlight the NASDAQ 100. Guess what? That is a record closing high for the other NASDAQ index. And here's the S&P 500 up just over 1%. And I'll show you the intraday price action there. Pretty bullish. We got gap up on the open, a little bit higher, and then we are closing pretty close to those highs of the day. And if we fast forward into the sector action, it's been a story of cyclicals today, along with some other things thrown in, but materials and industrials claim the top spots there. Financials, tech, communication services, healthcare, energy, real estate, all of those up more than 1%. And then to the downside, we only have a couple losers, staples and utilities, and they're only modestly to the downside today. And if we take a look at the NASDAQ 100, story is Apple, up 3.94%. And I'm going to put a one-year chart. This is the first record closing high that Apple has had since December 26. So we have not had one this year until today. Meta up 2%, Amazon up 1.5%, Tesla up about 1.5% as well. And it's been a day of tech dominance. Aside from some of the big ones here, I'll put an equal weight version so you can see the distribution. A lot of green in that screen here, and also in software. Aside from Oracle, a lot of dark green as well, with CrowdStrike, Adobe, Shopify, Salesforce, all of those up more than 3%. And taking a deep dive into the Dow here, aside from some of the mega caps that we took a look at, looks like Walmart's down about 0.2%, Home Depot down 0.75%, McDonald's off just slightly, but United Health up over 2%. Mentioned Salesforce, got to mention Goldman Sachs and JP Morgan after those earnings last week, up 1.5% today. And then a deep dive into transports, where we see airlines. Look at that, Delta up 3.5%, United up 2%, Southwest up over 2%, and American as well. Besides Uber up 1.5%, looks like the railroads just doing all right today, and some of the other involved in the nitty-gritty of transport, like Kex and Landstar, also up more than 1%. I'm going to leave us off on China. This is an uncorrelated asset class that did very well today as well. You can see NIO up 4%. It looks like NetEase up 3%, and Alibaba up almost 4%. Josh.
Thank you, Jared. Well, stocks closing higher as investors brace for a critical earnings season against growing uncertainty around the Fed and tariffs. For more, we're bringing in now Thomas Martin, Senior Portfolio Manager at Global Investments. Thomas, it is good to see you. So you describe the current environment, Thomas. You say bullish but uncertain. Walk us through what you mean by that.
Sure. Well, I think everybody knows that the bullish part is the AI cycle, and people questioning whether or not that is overdone or a bubble. We don't think that it is. We think that there's plenty of room left to go, but it certainly has come fast pretty far, and expectations are high. But the data keeps on coming in good. The announcements from companies of spending, capital spending, and being able to monetize it. So that's the bullish part. And there are other parts of the economy too. I would say the entertainment part of the economy is fairly bullish. If you look at communication services and some of the consumer discretionary areas, also just utilities, which was down today, but that's come a long way pretty fast. So I just think you have to be careful with some of these moves. Many companies' stock prices are up 20, 30, 40, 60% year to date. And we're coming into the tail end of the fourth quarter. We're through the part of October, which is usually a sort of a down then up month. And so true to form, it's been down and then back up. So we think that the underlying fundamentals are bullish, but stocks have moved.
There was this good piece in the Journal, Thomas. I don't know if you saw this over the weekend. I'll read it to you if you didn't. Headline, the warning signs lurking below the surface of a record market. Good headline. And what they were basically talking about, Thomas, was Wall Street getting more defensive. And they were pointing out regional banks, retailers, home builders, airline stocks, tumbling over the past month. What are folks piling into? They say it's utilities, it's healthcare, it's consumer staples. What do you make of those trends? What does it tell you?
Well, I think that each of those sectors and industries really have their own story. Utilities is just the increase in demand for electricity, and whether it's the independent power producers or the blocking and tackling electric utilities, you're moving from growth rates which used to be GDP to some multiple of that, so as much as 2 times or more in the earnings growth rate. So it's a conservative area, but it's also now a growth area. So that's a unique story. It's been difficult for the staples, particularly in the food types of names, because of GLP-1s and just lower volumes and pricing that got a little bit out of control during COVID. So those have been under pressure. And I think we still have more room to go for both the utilities on the upside and for staples being sort of hanging out there. Now, that being said, people will flock to the names that have underperformed when you have uncertainty in the market and you go, growth stocks, too many growth stocks. We have to have some value. We have to have some conservative. And you get a rotation for a day or two. But as long as those growth trends are not broken, the market comes back to those growth companies.
Can I ask you another trend I want your take on, Tom? Stocks working today, so is gold. It continues to shine. I know some people say, explain the move, Thomas. Let's say, just listen, central banks, including the Chinese, are buying. Institutional investors are increasing their allocation. Is it that simple?
That's a great question. In the face of gold being up as strongly as it is and at record highs, and all of the press that it's gotten recently about, the debasement trade and the central banks. And, in the past, central banks have held a much higher percentage of their reserves in gold. So you can see that there's room to run, and there's no real other way to measure gold. There's no earnings, there's no yield. It's definitely a perceived value trade. And it's even been called a safety trade. But it moves in relationship to people, how people are feeling, and to sentiment. Technically speaking, gold has reached an area where it seems ripe for a correction, but it's powered through that. It's just a question of when people decide to take profits, I think. But the fundamental story for gold is still strong going out into the future. So I think people will be looking for opportunities to buy the dip, which is going to mean you're not going to get probably much of a decline in the gold price, of significant proportions.
Fine. I only have a minute left here, Thomas, but we also have a Fed policy meeting on deck. I'm curious what you expect to see and hear there.
Well, I think at this point we expect to hear more of the same, which is it's a meeting by meeting experience. The dot plot is looking for 2. The market's looking for 2 by the end of this year. The question is what will happen after that and into 2026. Do we really get down to a 3% number? The odds right now in the CME is that it's better than 60% that we will. But I think you're going to see measured language out of there and nothing to surprise the market. I think there's no reason to surprise folks coming into the end of the year.
All right, Tom, it's always good to see you. Thank you, sir.
Great, thank you.
Well, coming up next, Apple shares closing at a record high here. Can the run continue? Plus, Netflix reports earnings Tuesday after closing Barron. We're going to tell you what you need to know. Apple shares touching a new record for the first time this year. It's thanks to an upbeat note on iPhone 17 sales. Counterpoint Research saying in a note the iPhone 17 series outsold the iPhone 16 series by 14% during the first 10 days. It was available in China and the US, which are, of course, Apple's 2 largest markets. Joining me now, we have Dan Flax, Neuberger Berman Senior Research Analyst. Dan, it is good to see you as always. So Apple in the green today, Dan. It's up more than 30% now in the past 6 months. The news today, Dan, you saw a number of positive headlines. I mean, we mentioned the Counterpoint Research But I also saw, Dan, I saw Evercore add Apple to its tactical outperform list. I saw Loop Capital, they upgrade Apple to a buy. They go to a street high target here of 315. What do you make of all these headlines? I mean, bottom line, how strong is this iPhone cycle?
Great to be with you, Josh, as always. I think the cycle is off to a pretty good start. Expectations were very low coming into the iPhone 17 cycle. And really the key is that the company is continuing to innovate in key areas like the camera, video, and really pushing the user experience forward. And what we've seen and what I suspect we'll continue to see in the next several months is that more users want the Pro and the Pro Max. And so you've got a healthy mix underway. So you have an installed base for Apple iPhone that continues to grow, a good mix. You have a services business that remains very healthy. And so I look at this as a story of continued innovation, product execution, and we continue to like the stock over the year ahead.
How much, Dan, is this just about? Put it simply, you got a lot of people all over the world who are just ready for an upgrade. It's been a few years, and you know what? If you tell them, here is a stronger battery, here is a faster processor, they're ready to make the move.
I think that's a part of it, but what's critical here is the innovation and pushing forward the user experience. If you think about the iPhone, really this device is becoming more important in both the digital and the physical world. If you think about use cases with generative AI as an example, the camera with visual intelligence. So all of this is becoming more important. A stronger battery or a longer battery, more features, a faster processor, that's important. But pushing this forward and integrating the hardware, the software, and the services in a fun, intuitive, and secure way, I think helps drive growth. I think also the market for smartphones has been mature, but what's important here is if Apple can continue to redefine the experience, which I think they're doing, then that really lays the foundation for good growth as we think about the quarters ahead.
What about, Dan, the kind of just great AI debate here? In other words, I mean, you heard the Apple skeptics who would say, listen, they came out and said, Apple does not have a compelling AI story. Apple does not have a compelling AI strategy. And they framed it as a kind of potentially existential threat for Apple, for Cupertino. What do you make of that?
I think Apple Intelligence needs a lot of work, and I think we're going to see more and more progress over the next several months. You'll see improvements to Siri. I think it will really become a more important part of the user experience, but there are many other things besides that will help. So for example, if you think about the creativity, the photos, the video, the sharing, the health and fitness features, a lot of these things will benefit from generative AI, but at the end of the day, users just want to have a great experience that's private and that's trusted. If I think about the year ahead, you will see improvements to Siri. You'll see Apple really continuing to empower others to build on top of the platform. They're going to work with others, including OpenAI, Google, others, Perplexity, to really ensure that developers, big and small, are successful on the platform. If they're able to do that, Josh, in my view, that will lay the foundation for good growth for iPhone and really the broader business over the next 12 to 24 months.
What about, Dan, changes in the C-suite at Apple? You know, you saw that there was a fair amount of chatter and stories, even analyst notes about that. Would your bet be that, Dan, there is a change there, or no, would your bet be you think Tim Cook stays in that position for a few more years?
I think Tim Cook will be with the company for several more years. I think he's done a very good job nurturing strong leaders, continuing to empower developers. There could be a scenario where Tim Cook remains as executive chairman for many years into the future. And so I think Tim has done a terrific job. I expect other leaders to take more and more responsibility within the organization. You've seen they've had a very successful CFO transition. Kevin Parekh has taken over from Luca Maestri, who's still with the company. And so I expect that deliberate, thoughtful executive succession planning to continue. But the story in my view, is going to be about the innovation, the product cycles, and really delighting users to drive growth.
I want to switch gears here, Dan, get your take on another name and another story today, and that's Amazon with this AWS outage. I'm just curious what you make of that, Dan, and the investor response. I mean, investors were not worried today, Dan. They seem to just shrug this off. Amazon actually finished up here 1.6%. What do you make of the story? What do you make of the investor response?
The outage today doesn't change our view on the stock and the longer term outlook for the company. And the reason is because you do have outages occurring at AWS. It's happened at other cloud platforms as well. Really, the key is, can a platform like AWS can recover, which I believe they will very quickly, continue to invest, drive value for their users, and really unleash a whole new wave of innovation in key areas like generative AI. And that is what I do think we'll see over the next 12 to 24 months. AWS is capacity constrained like some of the other clouds, but when I step back and when we speak to customers, the trajectory is clear given the innovation, the aggressive level of investments, and really empowering others, developers, enterprises to be successful on the AWS platform. And I expect we'll see a lot more of that in the year ahead.
Yeah, just quickly, Dan, on the stock, I mean, listen, it's a nice move in the past 6 months, but it has not been a great year for Amazon. What do you think the issue is there? And obviously, you're confident there. You think it's going to change the narrative.
The issue is that Amazon is the biggest cloud at well over $100 billion of revenue. And so their growth rate in the high teens is slower than Azure inside Microsoft and the Google Cloud platform as well, which are smaller. Both of those platforms are executing well. And critically, this market, this cloud market, is growing at healthy double digits. And so the market is worried that Amazon is losing share to other players. What we see is a very durable double-digit growth platform, healthy margins, aggressive levels of investment and innovation. And so Amazon, in my view, can create a lot of value for customers and shareholders if it can grow in the high teens or a little bit better at times. But that's the very near-term worry, Josh. I look out and think that they're laying the foundation for continued strong growth in the next 12 to 18 months.
Dan, always good to see you. Thank you.
Thanks.
Netflix will be the first big tech name to report earnings. Its results are due Tuesday after the close. Alec now is here with what to expect from the streaming giant. Allie.
Hi, Josh. Yeah, well, the big question mark is whether or not Netflix can sustain its growth amid really high valuation risk. So the stock trades at around 45 times forward earnings. It's up around 40% since the start of the year. But we have seen the stock lag in recent months as valuation concerns start to emerge. We also had Elon Musk calling for a boycott of the streaming company, although analysts have pretty much shrugged that off at this point. But it's really all going to be about the advertising momentum. Netflix recently signed deals with Amazon, with Spotify. There are some Wall Street strategists out there who say a lot of that optimism has been priced in to the current share price. But if we take a look at Bloomberg consensus estimates, analysts expect revenue of $11.52 billion and earnings per share of $6.94. That's both roughly in line with Netflix's guidance. Now, Morgan Stanley analyst Ben Swinburne said he's confident in the longer term story here for Netflix, calling for double-digit revenue growth, 25% annual EPS gains through 2028. And he says that's going to be powered by continued pricing strength, disciplined content spend, and continued scaling of those ad economics. Now, the lofty valuation means that there's little room for error here. And that's exactly what we saw the last time Netflix reported. They beat on both the top and bottom lines. They raised full year guidance, but the stock did fall in after hours trading after the results because it just wasn't at the level that those investors expected. So that's often the warning sign and the double-edged sword that we've been hearing heading into this latest earnings season, that if you're not able to clear that high bar, the stock is going to be punished a bit here. So overall, I expect strong results, especially as we have live events continuing to outperform. We have the return of key programming. Nobody Wants This, which I'm very excited about. It's coming out this week. Stranger Things coming out at the end of the year. So that's only going to continue to boost engagement, which is key for a company like Netflix. But in the near term, those valuation concerns are still very real on Wall Street.
Yeah, I don't know if it's any indication, but in my house, man, the 6-year-old, K-pop Demon Hunters, dude.
Yes, that was the most
24/7.
And it was the most viewed movie on Netflix in its history. I mean, again, and that has been cited as the strength of the company, how they're able to take IP that's relatively unknown and just make it a hit.
And that was a hit in my house for sure.
Thank
you, Allie. Appreciate it. Time now for what to watch Tuesday, October 21st. Let's start off on the earnings front. We're entering the thick of earnings season now with some big names reporting on Tuesday, including General Motors and Netflix. General Motors is going to be announcing results for the third quarter before the markets open. Analysts expecting GM's profits to come in as forecasted, around $226 per share, which is 24% lower than last year, but U.S. sales are still up about 7.7%. Some buyers rushing to purchase before tariffs and that $7,500 EV tax credit expiration in September, which could mean weaker demand later this year. And switching over to Netflix, the streaming giant is reporting third quarter earnings after the closing bell. Analysts anticipating Netflix to report strong growth, about 17% higher revenue in Q3, driven by popular new shows and movies like Squid Game Season 3, Wednesday, and K-pop Demon Hunters. And taking a look at the Federal Reserve, we're going to be getting some commentary from Fed Governor Christopher Waller on Tuesday. This is coming ahead of an important week for the Fed, with the Bureau of Labor Statistics finally releasing the September Consumer Price Index report on Friday. Investors are going to be listening for any clues about the Fed's path forward with monetary policy ahead of its FOMC meeting toward the end of October. Well, that does it for Market Domination Overtime. Be sure to come back tomorrow for full coverage, earnings, market action, and a whole lot more.